अभी रिकॉर्डिंग नहीं कर पार्टिसिपेंट्स 3 आ गए।
Everybody, uh, thank you very much for attending the first Fintech webinar by Pakistan Fintech Network. Just to give you a little bit of idea as to the genesis of the Pakistan Fintech Network, this came about because we felt there was a very strong need for collaboration between banks and fintechs. My view is very simple, that banks are long on capital and short on innovation. And exactly the opposite is true for fintechs who are long on innovation and compared to the banks short on capital. And if collaboration can take place, we will see a force multiplier happening in the market based on the amount of capital that the fintechs have raised to date. If I amalgamate everybody, including the big raise that Talal was able to do for TAG, it's less than $100 million, which is a drop in the ocean. You cannot change an industry based on a capital of $100 million. So as you're seeing this year, we're having exponential increases. We've had a remarkable raise by Airlift of 85 million, followed by Bazaar. But both of these are non-fintechs. Fintechs have not been able to generate this kind of capital. With the coming of the digital bank with the requirement of $25 million, it's possible a couple of them may get partnerships where they can amalgamate this kind of capital. But typically of the 40, 50 fintechs which are in lending, in payments, in insurance, and in information, no one's been able to raise capital beyond 10 million. There are only two entities which have been successful at that level. So in my view, it's incumbent that we work with banks, where banks provide their balance sheet and their payment rails to the fintechs. So together we can have material effect on the industry. That's the first point, the collaboration between banks and fintechs. And I know the State Bank supports this, and I know that the recent lending that program for SMEs, the State Bank has constructed it such that banks who piggyback with fintechs will get a boost as opposed to try and do this on their own. The second point that I want to make is that financial inclusion still remains limited in Pakistan because we're a cash society. We have more than, I think, 3 trillion plus money in circulation, and that's not going to be coming into the economy in a hurry. But we can partially change the situation if we build more effective use cases in the wallets. So the issue of opening a wallet finished a long time ago, thanks to the State Bank, for the level 0 account, the AMA account, and the mobile account, and now the RDA. So opening an account is no longer the issue. The issue in my mind is what's the use case in those wallets, so that the percentage of active wallets that we have start increasing as opposed to just the number of wallets. And in my view, the biggest use case that could change the industry would be digital payment acceptance at retail or Kriana stores. There are 2.1 million Kriana stores in Pakistan, and the number of POS machines now has gone up to 90,000, but that's largely KLI and large stores. How do we induce the Kriana stores to start accepting digital payments while getting them to accept digital payments either through QR or soft POS is our requirement. It's not their requirement. Their biggest concern, as previously, remains when I'm taking cash, I'm not paying any MDR, whether it's 1% or 0.5%. Why should I pay additional revenue? Two, potentially I get under the tax net. Now my transactions are being documented, and this is potentially a way open for FBR to come and start knocking at my door. There have been now pilots for providing credit. Bank Al Falah is doing it, Telenor Bank is doing it, the other fintechs are now partnering with banks to do it, where those Kiryana stores which are accepting digital payments either through a QR code or through a soft POS or a regular POS are being provided credit. That is the number one pain point in my view for the Kiryana stores. If you want them to accept digital payments, unless you give them credit, there's limited appetite on their part. We are only 90,000 Kiryana POS machines, and that's, I'm not sure that's unique number or absolute number, and that's hardly anything. The FBR introduction of integration in POS machines is for the large stores. It's not for the Kiryana stores. Kiryana stores is where, in my view, the action is, with, especially in rural areas where when we get acceptance, then we will start seeing some of this cash coming into the digital world. And obviously, when banks get deposits, there's a multiplier effect on the lending side. The introduction of the one QR code, which the State Bank has talked about, and this recent facility of lending to SMEs with first loss cover, I think are going to be a great boost for those banks and fintechs which can work together and make this happen. So I think the State Bank has created the enabling environment. It's up to the private industry now to use that environment, banks and fintechs to collaborate and try and figure out how they can achieve the lending piece and therefore then the digital acceptance piece. The third point that I want to talk about, and I know there are specific burning issues that the entire FinTech network founding team came up with, that I'm saving for the panel discussion so that I don't end up repeating what's going to be discussed in the panel discussion, is something very close to my heart, and I know it's very close to Seema and Sohail as well, is open banking. Open banking, in my view, again, is a game changer, and I understand open banking is going to take time, but open banking, again, with banks which are having an open mind and fintechs that are willing to collaborate, those data points, those customer data points, you have 55 million plus more, bank accounts, including wallets in the banking system. The transaction history of those data points provided to fintechs based on customer consent will, in my view, lead to further product development by the fintechs. And obviously, there has to be a good commercial case so that all three parties, the customer, the fintechs, and the commercial banks, benefit. And equally important is customer protection and data privacy. And I know that the State Bank, Seema and Sohail are working on this with industry collaboration. I know it's going to take time, but in the last meeting, I felt that we are moving in the right direction. Although my view was we can move faster, but the private sector always expects to move faster. The regulator, because it has greater responsibilities, takes its own time. So I'm going to stop here. The 3 points that I made, I'll just encapsulate once again. I believe financial inclusion is going to be best tackled by collaboration between banks and fintechs. And both banks and fintechs need to figure out a win-win situation. Fintechs are too small right now to make a dent with the kind of capital they have. And in my view, with no offense to my two fellow bankers on the panel, banks are long on capital and short on innovation. Their legacy systems preclude them sometimes from providing quick responses to what the market needs. And therefore, the collaboration would be ideal. And Pakistan FinTech Network has been established partly because of this. Secondly, my point was focus on digital acceptance at Kiryana stores as the main use case in the wallets. Again, both banks and fintechs can collaborate. And the third point was open banking. So, ladies and gentlemen, thank you very much. I'm now going to pass it on to Deputy Governor to give her opening remarks. And after that, we're going to go directly into the panel. Thank you very much.
Thank you, Nadeem, and thank you everyone who's here. It's a pleasure to be here. And as I said before, collaboration is key. So I'm very happy to see, Nadeem, I said this to you before and all to the banks here, that it's very, very important that banks and fintechs collaborate. This doesn't mean that other people have different views. And I know that certain banks may have different views and certain fintechs may have different views, but I personally, Nadeem, you and I probably entered banking at the same time. Less. And we have seen a lot of people talking about, banks are going to die, banks are dinosaurs for various reasons. Not technology. When I first came in corporate banking, it was disintermediation. They won't be needed. And I think Atif also would agree that they've heard this too many times, and banks have been around for 2000 years or more, and they will exist in way, shape, or form. However, it's true that some are not as nimble or innovative, and some are actually becoming more nimble and innovative. So I think while certain fintechs and certain banks may prefer to go their own way, I personally think that there is a larger group where collaboration helps. And so I personally, and I think all of us at the State Bank, and we have respect for both sides. So I think that collaboration is indeed the way ahead. I'm going to, Suhail has a very detailed presentation later, so I won't go into all those details, but I'll tell you from a regulatory or a state bank perspective, our principal objectives obviously are financial stability, and nothing can take away from that. And now increasingly so, always there is security, and particularly cybersecurity, which is critical to all of us. And in recent days, we have seen some events that have obviously made us a bit more aware of that, and we are all working towards that. And then inclusion, obviously. And then, so those are our principal aims. And of course, talking about them here, we will talk a little bit more about inclusion. And we talk of inclusion all the time as bank accounts or wallets. And I think we need to, and I've said this for a long time, we have to actually understand, what do we mean by inclusion? What are we actually offering the customer? And at the moment, just to say that you opened an account and you've done one transaction in a year or two transactions is not inclusion. And while you're right, we do have to have more digital acceptance. Inclusion truly will happen when we actually can offer whoever opens an account something in return, particularly the excluded ones, the low income ones. And I'm just, by way of anecdote, I talk about my driver, and Sohail is aware of that. I forced him to open an account, and he said, okay, I'll open it, but after 2 days, I withdraw the money. But you're insisting, so okay, I'll do that. And he started even to save a little bit on it. And then there was a bit of social engineering, and he lost all his money. He got a phone call. He has no idea what they were asking him. He gave details. He lost his money. We managed to help him to get it back, but he says, I really don't want this. And what good is it to me? And until we can answer that question, we will not have inclusion. So talking about that, so what I would like to talk about is that we have to work to remove barriers to entry. Right? And when I say barriers to entry, I'm not just talking about entry of fintechs or entry of banks, but I'm also talking about the entry of the excluded customer. So I'd just like to focus a little bit about what we are doing in that context and what we are planning. And there are a number of things, including some of the things that you've talked about. So the first thing we do is actually fix our own selves, right? So what we are doing, because until you're organizationally fit, and all of you know that having run organizations, is that until our own structure is fixed, both as a regulator, we can't really do that. So now we are in the process of setting up instead of what we call the payments group, it'll be called the Digital Financial Services Group. And that will have the payment systems and oversight department, an innovation and settlements department. And we are working with IFC and the Gates Foundation and others to actually set up an innovation office within the state bank, which will of course have sandboxes and all of that, but that That is a key building block that we need so that that entry barrier becomes easier. The other things that we are doing, which is very important, is some things that obviously we've already done, which is giving licenses to EMIs and PSOs and so forth. The other barrier to entry is frankly bringing in open banking, as you talked about. Right, so that's again allowing both access to data, access to permissioned data, which is in short what it is, and also not just to banks, but I think we will have to move into other holders of data as well. So there is reciprocity, and both banks and telcos, for example, come to mind. And the fundamental question, which I think is still troubling everyone in their minds, and they may not even say it, is the ownership of data, right? So I think everyone will accept that the data is owned by the person that it belongs to, which is the customer, right? It is his or her data, but there are still obviously mental blocks because there are entities who have invested and they believe data is an asset. So that's where we are. That's where we come to another thing, which is a barrier to entry, which is pricing. Therefore, we have worked on that because, and it might be controversial, but that's another barrier to entry that we have been working on, right? And the whole conversation on IBFT and all of that, which has, we know we cannot make everyone happy, but then again, we will always look at inclusion and reducing barriers to entry, which is why pricing then becomes an issue of intervention. Arguments both sides, but for us, again, that becomes R. The other thing that we're doing, again, which is the digital banks, that's also removing a barrier to entry. Our consultation is over and we are hopeful that in a month or a couple of months, we will have the rules out and it's open. There is interest outside the country, there is interest within the country, and there is interest in collaboration. Again, I think, especially for those outside the country, collaboration is the best model. And we are getting interest from diverse countries as far away as South Africa or China and so forth. And then again, that will be a challenge. Digital onboarding, that's another barrier to entry that we want to remove. And again, we've made progress, and those regulations, and also taking a guidance from what we achieved in Russian digital, will happen. So, and then the last very important part of removing barriers to entry is interoperability. And if we can remove that, again, when we're working on that, we've done some work and we're going to get that standard QR. Again, we will be reducing barriers to entry. So that's my theme, that we will look at it always as a regulator from that perspective, which means that everyone is welcome, whether it's banks, fintechs, but as long as they improve inclusion and true inclusion. Coming back to true inclusion, we will have to learn to lend to those people. And I know that you worked on nano loans and so on, and the experience can be painful, and we are learning, and which is why you talked about what we call SAF, which is SME Asan Finance. And that is the real reason why we brought it in, and we brought it in at a small level. It's only 10 million rupees. Again, we are trying to, on the SME space, removing barriers to entry. So if that happens, we will have people who come, banks who come in on their own. But I think we have, as you said, with a fintech, it will make a big difference. The challenge to all of you, and I see that, is how for the banks and the fintechs to work together. And that is a challenge that perhaps entities like yourself can help to bridge, because what is happening very often is that there may be an entity that is very good at lending. When they come into the banking system tends to take over and then stifles them. And then the experience can become very difficult. So there is many cultural things that need to be resolved, and which is why I'm glad that you have banks and you have CEOs and people who are going to actually break those barriers. Because the reluctance, or that I can do it all, and while this particular fintech wants to lend in this way, I still must go to my credit, and they will still go back into their corporate banking way of thinking. And then that becomes, so I think one of the biggest barriers that we find is cultures within both the fintechs and the cultures within the banks. So I think how we break those is going to be something that we try to do, and therefore we try to use our regulatory powers as well. For example, on inclusion, we're doing the banking on equality, right? And we're actually now saying that we're not going to be gender neutral anymore. We're going to be gender intentional. We're going to actually dictate. We have dictated on mortgages too. It may not be a popular thought, and I'm sure there are other views as to how it should be done, but and Atif is smiling, but the way we've done it, and I feel very personally invested in this to some degree. We've done it and we've pushed it because the other things are just simply not working. Then how can you have high street banks that don't do mortgages? While when they look at their corporate books, eventually they find they possibly have lost more money in the last 10 years than they ever do in their consumer banks. So that was basically, you had talked about 3 pain points, which was one was regulatory. And yes, they are. And we are trying to, as you know, play a role in that in our stakeholder meetings, try to bring the principal regulators on the table, and also working with them bilaterally. So we have now got a team going on with FBR. We are also going to work with PTA and try to work on this whole social engineering piece. And we are working with NADRA too, both when we come on the stakeholders meetings, but our own forums as well, so that we're trying to assist on that. On financial inclusion, I've already spoken about. We have to have customer models and to meet their needs, which I think, despite our best intent, we haven't really got to yet. And then you talked about cash, and Sohail and I actually spoke about that yesterday. And we said, we have to find a way. And I said, we have to be as elegant as cash. And he actually said, no, we have to get better than cash. And that again is an enormous challenge, particularly in an economy that does not wish to be documented. And so that challenge remains, and we have to work together. I have no easy solutions to offer, but one of those might be that we make it superbly easy. But we are very far from someone going to a Redi and buying Montpellier using a QR code. I think that's a bit of a, but if we can even do it to certain levels, and that will help. But people will have to see the value, and right now I don't think we have been able to prove that value. So I think that's the other part. So I think that's really what I'm talking about. But I think I'm happy to listen to what everyone else has to say, and I'm glad that you've had this meeting, and I hope it goes really well. Thank you, Nadeem, and everyone else. Thank you.
Sir, I think you're on mute.
Before I hand it over for the panel, I think we have the Deputy Governor here. If any of the panelists, based on what she said or I said or something else, have a question for her, she's got some time, she can respond. Otherwise, we'll go to the panel, and many of those questions can be answered by Sohail, who has very comprehensive sense of, the fintech industry.
Nadeem, with your permission, I don't really have a question, because I think we get opportunities to ask questions otherwise also. But I think one important point that I want to make here, that I think we all need to align on key objectives, the objectives that the Deputy Governor outlined in her opening remarks, such as financial inclusion, such as documentation of economy and replacing cash with digital payments. And then we also need to then brainstorm together, because we need to innovate. So a lot of time, I think there is a bit of a disconnect where I think the central bank is perhaps sometimes thinking ideas in isolation or sometimes with some selected players. I think let's create a forum where we can exchange ideas openly and do some really great problem solving together. That's the only point I want to make. Thank you.
I mean, I don't think we have any objection to that. And I know, and we are very happy always to listen. But obviously I've tried to make clear our objectives, and our objectives really is true inclusion. And sometimes various things we may disagree, but we're certainly always available to listen. But we do have a lot of stakeholders, as you understand.
Absolutely.
Agreed. Thank you.
Okay. I thank you very much, Deputy Governor. I'm now going to hand it over to Noreen Hayat, who is the CEO, co-CEO and founder of Taste Financial Services and our moderator for the day. And we have an hour of panel discussion. So Noreen, over to you.
Thank you indeed, sir. Thank you indeed, Honorable Deputy Governor. Thank you for sharing your insights. And it's always comforting to hear the regulators speaking the same language as you. Appreciate the SPP's efforts in driving the financial inclusion agenda. Well, building upon the stage set by Mr. Sen and Ms. Deputy Governor, we are stepping into our star-studded panel discussion today. And amongst us, we have Mr. Sohail Jawad Saeed, who is the Director at Payment Systems Department of the State Bank, Mr. Atif Bajwa, the CEO of Bank Al-Falah, Mr. Mudassir Akil, the President and CEO of Telena Microfinance Bank, and Mr. Talal Gondal, the founder and CEO of TAG. Well, in today's discussion, we hope to arrive at some tangible takeaways to address key challenges in three core areas, and these have been highlighted by Mr. Hussain and Deputy Governor as well earlier. And these, firstly and foremost, are the digital onboarding of merchants and individuals. Secondly, interoperability and QR-based payments. And thirdly, adoption of digital payments at scale. Well, Pakistan has star power when it comes to digital uptake. We see with our 5th largest population, a 130 million population with people under 30. And this Gen Z and the younger population actually is even larger than that of the United States and Indonesia. And this all is supplemented by high teledensity and internet usage. But the potential to steer the shift to digital and promote cashless payments is yet to be truly realized. And one of the challenges being faced in this digitalization of retail transactions is the large number of is a lower number of digital transaction acceptance points. Merchant onboarding it's a costly business, and as a result, the number of POS terminals that we see have been hovering only around the 50,000 mark. Now, there are many reasons for this shortfall, but the primary one is the process of digital onboarding, the process of onboarding of merchants. And recognizing this, we've seen the State Bank bringing in some regulations. There have been amendments to those regulations, but there's still challenges that exist in way of the onboarding of merchants. So I'd like to begin this discussion by posing my first question to you, Mr. Bajwa. What do you believe are the challenges in way of the digital onboarding of merchants, despite the State Bank bringing in regulations to address the challenge? And how do you see we can optimize this process?
Thank you, Noreen. And Assalamu alaikum, Seema ji and Nadeem and Sohail Saab and Mudassir and Talal. Very nice to be on the panel with you. The question that you've asked, I think, is an important one. I think the friction that we see in merchant onboarding has to be reduced. I think that the fact that the State Bank of Pakistan has come out with regulations and guidelines that help the process of direct merchant onboarding is very positive and has moved the needle. At least for us, we've gone ahead and we are now onboarding approximately 10 merchants daily using direct merchant onboarding. we have a significant amount of traffic now starting with these merchants, but there is friction that, as to your question, there is friction that needs to be reduced. And if I can just point to a couple of things. One is, of course, that the information that we require that is not on the CNIC. There are two bits of information that we require: a mother's name and the place of birth. What we find in our experience is that this is causing a fair bit of the rejections because there are spelling mistakes. So is there a way to reduce this kind of rejection by using simpler and fewer pieces of information? Whenever you ask for names, there is a chance of a spelling mistake. If you ask for numerics, perhaps the chance of a mistake is reduced. And perhaps we can also, instead of 2, come down to 1, because this is really further verification of information that we already have. So that's one piece. The second one is the requirement for uploading the picture front and back of the CNIC. So this is another friction point. Now, we've already done Nadra Verisis. We've gone through that process. And then on top of that, we want to pick. The picture is something that that causes problems technologically, doesn't come out clearly, and it causes issues. Is it necessary, given that we already have Nadra Verisis done? So maybe that is another area to be looked at. The third piece of, well, this is perhaps a good problem. As we have seen adoption by merchants, the limit of transactions has been reached already. So the 500,000 limit is now being reached, and we are receiving demand for increasing this. So perhaps an increase to 1 million would be useful to get more merchants interested to do more transactions. So I hope that answers your questions. Just some of the frictions that we see in our experience and what can possibly be done to reduce that.
Thank you indeed, Mr. Bajwa. Indeed, I think operationally, many of us face those challenges. And I'd like to, pose the same question to you, Mr. Akhil, building upon what Mr. Bajwa has said. We do see with EasyPaisa, you've actually managed to have about 20,000 merchants already, but unfortunately, you see, 30-day active merchants starting at around only 3,000 or 4,000. So what are the challenges that you see? And please, when you're highlighting the challenges on the merchant onboarding side, would be great for you to touch upon the challenges on the individual onboarding side as well, since you guys are dealing with wallets here.
Thank you, Noreen. Assalamu alaikum to all the colleagues and respected Deputy Governor Suhail Saab. I think what's really important to first of all understand, by the way, Noreen, I know we spoke last night, but I double checked the numbers. We have actually onboarded 30,000 QR merchants, and 10,000 are actually monthly active. We did, in the last 12 months, we did about 2 million QR transactions, as per the information that I've gathered from the team. But I think still it's not even a drop in the bucket. That's a very, very small number looking at the whole quantum of the market. So even I, as a consumer, when I go out in the market, I hardly see the presence of it. And let me just take a step back and sort of explain, this is a twofold problem. One part of the problem is there might be some operational challenges like Atif Saab just highlighted in his comments. And the other one is that, do we have a sustainable ecosystem where all the actors have a benefit, right? It means economy, ecosystems have the same root. They all run on incentives and disincentives. So unless we make sure that in a market economy, all actors have an incentive and disincentive, the ecosystem is not going to grow. And then we will run into the kind of problems that we are running into right now, where you open accounts on one end and then they close on the other side, they go dormant. So I think State Bank has done its part already by making the onboarding regulation, I think, exponentially simpler. For tier 2 and 3 merchants now, it is much, much easier to onboard these merchants. The real problem is, which Nadeem also highlighted in his opening remarks, is that they have an inherent disincentive to start accepting digital payments because they don't want to get documented. And then if there is an MDR, they want to avoid MDR also. But primarily it's the avoidance of documentation. And so, and then the second part is that Pakistan is a very large country. And when whenever we introduced this new kind of service, you have to balance supply and demand, right? So I mean, think about, I think a good analogy would be that how when Uber enters a market, you will never hear Uber saying that Uber is entering Pakistan. Uber will always talk in the terms of how many cities they're operating. And they would say that Uber is now in 200 cities across the world or 300 cities. And what they do is that on day one, they make sure that they curate the whole thing in such a way that there are enough rides available and then there are enough people requesting rides at the same time. If you mismatch any of those two things at one point in time, if I request a ride and if I'm waiting for 2 hours for the driver to show up, I'm not going to do it again. On the other hand, if I'm a driver and I'm waiting for a ride all day long and nobody is calling, then obviously I will look for an alternate to make my living. The same applies here in the QR payments also, because overall, if we look at how many people are using smartphones to make QR payments or capable of making QR payments, I think we are still south of 10 million at a pan-Pakistan level, right? So between Jazz Cash and Easy Paisa, we are a little over 7 million. And then I think probably we can club all the other smartphone wallets roughly in no more than 3 million. So on a 10 million total population, we don't have critical mass to try to have hundreds and thousands of QR merchants all over the country, because then people will not be going to them to start making QR payments. That's one critical gap. So, what ends up happening is that acquirers like us in JazzCash and HBL, etc., we go and onboard the merchant, and then what we try to do is to drive transactions on that merchant, and then we start throwing promotions. We start incentivizing users to go there. We start creating an incentive for the merchant also, that they start encouraging the person who is walking in to start to pay using a QR. And then, we hope that over a period of time, it will get to a point where, the behavior will change and habit will form. And in that process, it's a painful process and it's an expensive process. So as a result, we are not seeing results because the core issue, which lies at the heart of it, is the disincentive for the retailer is not addressed. So what I propose is that we should actually go to a pull model, not a push model. We should push as a very 20th century acquiring model where you go and try to convince the retailer that why you should install the POS or open the QR account, etc. You should really have some kind of a government mandate or legislation that says that if you are a retailer, you have to accept at least one form of digital payment. Otherwise, you can't operate. You can't just say that I only accept cash. And then on the other end, you create, for which all the right pieces are already in place. The onboarding requirements have already been simplified by the State Bank, that we say now you can actually download the app yourself, self-onboard yourself, print the QR and put it up on your wall and you're in business. So I think that's basically, we will have to sort of like change our tactics and do some policy interventions if we really want to see a big change, in my opinion.
Thank you indeed, Mr. Akil. That really, was very informative. And I do have many questions that have come out of the session, but I'll be posing them to Mr. Suhail Jawad at the end of the session. He will be sharing on what the State Bank is doing along with other authorities here. Well, I'd like to come on to you, Mr. Gondal. Being a fintech player in the ecosystem, What do you think are the respective roles of, the various stakeholders to bridge the gaps in this space? Whether it pertains to collaborations, as Mr. Hussain and even Mr. Bajwa has spoken of earlier, or, is it technological innovations, the likes that actually could solve the operational inefficiency that banks are currently facing on onboarding? Do you think we have an enabling environment? How has your experience been?
There's two sides to these things, right? So one is on the side of regulator, and I very much agree with some of the points made by Mr. Mudassir in terms of mandating retailers to accept digital payments. That is one of the ways to actually create that pull that is required to have this mass adoption, and that has to come from the regulator or the government side of policy side of things, right? And on the second point, which was made by Mr. Atif, building up on that you have to incentivize the retailer to have this digital mode of payments, right? And the best incentive you can give them is a credit facility, right? Credit facility to grow, and that credit facility. So as a fintech could be just an enabler, but the credit facility would have to come from the banks, right? And banks and fintechs can then collaborate together to make this happen, right? To provide banks with that data for decision making for that kind of lending. That's the role of the fintechs, in my opinion. And that the lending side of things, the credit side of things, that we should partner with the banks. That's my point of view on how we can create mass adoption in terms of merchant onboarding. Another issue on the individual side and visual onboarding side of things is limits. I'm sure the regulator hears about this a lot from all the EMI players, right? I'm talking now about individual limits. So my suggestion, again, just a suggestion on this end is, and I have seen this work with most fintechs, how they operate abroad. I'm talking about Revolut, I'm talking about N26, which operate in US, UK, and the European markets, right? They also have like the same way the levels we have, like basic level, which then they have a limit on top of that okay, you cannot have more than 700 euros of transactions. A monthly limit is there unless you do a full verification, and then full verification happens through a video call, right? And then once you have done the full verification, then basically the limit is increased, and then there is no limit on how much you can operate through these EMIs abroad, right? So a similar suggestion for Pakistani fintechs, at least I would say, if we want the fintech wallets to become a primary account for the youth or for the women, the limit that is there has to be enhanced, and especially after biometric verification. So maybe not, I won't suggest a limit increase on the level 0, but on level 1, when the biometric verification has been done, there should be a higher limit on visual accounts, because then you know your customer, right? And you have already done the AML checks, and the risk is fairly lower of any mishaps, right? And I do understand the point of regulator and the banks that it shouldn't be too high, and this is fine, but let's say 500,000 or 1 million is still a fair limit once that level 1 KYC biometric verification has been done. And also, if you, again, on the point of merchants, if you go to merchants, again, if the limit is 500K, 500,000, that would also be something that would limit the mass onboarding or mass adoption by merchants, in my opinion.
Thank you, Mr. Gondal. That definitely is, very productive. That would be very productive. And interesting that you mentioned about, proof of life verification. We see that happening in countries like China, smile to get a loan. And, a lot of other challenges that are being faced by banks right now could be resolved by these technologies. Coming back to you, Mr. Bajwa, we are witnessing a lot of collaborations that are happening between, the new age fintechs and seasoned incumbents like yourself. And now we're talking about interventions such as open banking that are not only important but also urgent. What, in your view, is standing in way of this, or is needed to actually drive the successful agenda towards open banking?
Naren, I think before I go into open banking, I'd just like to perhaps make a comment or two just to support what my other colleagues have said. I think it's absolutely critical to ensure that there is an incentive that incentive structure of different kinds is put in place to have merchants adopt digital payments. And so one of the things, of course, has been mentioned is that there should be value created through the possibility of lending to these merchants. But of course, the transactional cost that we have through MDR is also considered high, and there is every need to try to reduce that MDR down to zero over time. Most fees like that, transactional fees, should merge towards zero, whereas the real revenue lines have to be through other value-added services like lending, like deposits, like money management or inventory management, and various other value-added services that can be provided. So I think that's something that we should think about moving towards. The other thing, of course, has been mentioned is that this resistance to digitization comes from desire not to be documented. And so there have been some experiments, like in Punjab, there has been sales tax that has been removed on digital transactions or reduced on digital transactions. I think those are things that need to be studied more to be able to reduce at least for a period of time, maybe 3 years or 5 years, to reduce the impact of any tax liability, so that the resistance to moving to digital is reduced. So I just thought I'd mention that. Coming to your point about open banking, I mean, clearly we're moving into a new era of through collaboration, giving products and services to customers at their own desire. And so that's a very, very good ambition to have for everybody, but it's not an easy one to do. So it requires, of course, the collaboration, but also this collaboration must happen in some kind of a framework, like the PSD2 in Europe. So you need to have an ability for fintechs and banks to work together on exchanges of data, on development of products, and I think we as collectively as a sector need to come up with a sector with a framework that everybody is comfortable with. So, for instance, there has to be reciprocity of data sharing. So earlier it was mentioned that fintechs would be looking at banks and transactional data to come from banks to be able to provide specific services and products to their customers. But I think there has to be reciprocity also. So the fintechs, as they develop different types of products, should also be able to share with banks, so that banks can also improve their own products and services in a similar manner. So that's something that needs to be looked at. The other thing, of course, is fraud liability in this kind of scenario has to be understood and has to be managed, because banks are hesitant, because banks are very security minded. They're obviously hesitant to share or let other entities come into their database and not cover the fraud aspect of it. So there needs to be some thought given to that, as you know, that in the card schemes provide that cover for credit card transactions. And so similarly, any transactions that take place with fintechs in an open banking scenario need to be covered as well. The other thing, of course, is that when we're doing open banking, a very critical component of this is a common repository of the key data of customer. As Seema also said in the beginning, that the owner of the data is really the customer. But the effort that banks go through to get that data and to keep that current is something that is of value, and that data is often replicated in different institutions, and the replication process means that the cost of data is actually enhanced significantly. So common repositories, for instance, all KYC data should be in a common repository. And so that makes open banking even easier. So the customer says, if you want my KYC data, it's already there. I don't have to reproduce it for another institution or another entity that's undertaking financial transactions. So to create those kinds of common repositories of data is essential. We have been talking superficially still, unfortunately, on how to create that. But I think there are some ways in which we can move in that direction with the support of the central bank. And if we do that well, I think then we really give the power to the customer to actually transact with entities that the customer desires to transact with. And I think that is the future, and banks or other institutions need to accept that and not resist that, because eventually this is going to be where value is going to be added for the end customer. So that those are some of my comments on open banking.
Thank you indeed, Mr. Bajwa. Some really great takeaways from there. I think, Mr. Akhil, you coming from a telco bank perspective, we see both commercial banks and telcos who reside on a lot of data. How have you been looking into this? We do see EasyPaisa, has been working as a platform. We see a lot of partnerships happening there. What's your view on the open banking agenda, and how are you opening up or aligning your vision with the fintechs and the players in the market?
Noreen, thank you. Very important question. Before I answer this question, you had actually asked me a two-part question, and I didn't answer the second part of it, which was how can individual onboarding can be enhanced. I'll try to answer that because it's very important. I'll try to answer that in 60 seconds, and then I'll come to your main question here. I think it's very important that we make sure that as many people can open a digital transaction account and start transacting with as little friction as possible, right? So typically what happens is that our funnel, the way it works is that between the time we get somebody to download the app, and then they go through various stages of registration and then eventually KYC, there is about 80% loss of between the time somebody has downloaded and by the time somebody has actually cleared the KYC. And some of the reasons for this loss in the funnel is already highlighted by Atif Saab, and Talal also touched on it, that various requirements of NADRA data, translation errors, etc. But I think there is an opportunity here that we create even below level 0, a very restrictive entry-level account, where we collect the MSISTN, CNIC, etc., this kind of information, but don't necessarily run it through the KYC process. Allow them to do for a 6-month period in a without cash out possibility 2 or 3 transactions, like a utility bill payment or mobile top up, and put a very small cap on it, like maybe a 5,000 rupee. So the idea is that you allow as many people as possible to dip their toes in digital payment with as little friction as possible. And then once they start using it, you graduate them to a KYC account. So that I think these are the kind of measures that need to be taken if we want to put a dent in the financial exclusion, because the numbers are very big. We have potential to reach from roughly 30 million people using any kind of a transaction account today to maybe 100 million in the next 3 years. But we will have to think outside the box and try a few of these things, in my opinion. So that's the point that I wanted to make on individual onboarding. Now, coming to the open banking, look, I mean, the way we are structured, that, a telco is a shareholder, but, policy decisions we align with the fintech sector and with the financial inclusion agenda. So we are for open banking. We believe that if you look at where the world is going, from data as a service to software as a service, and now to even banking as a service. So this is happening all over the world, and at a conceptual level, I agree that every consumer should have right on his or her own transaction data. This is that they should be able to leverage that to get better services from whichever organization they prefer. But like I said earlier also, there are ways to do this elegantly, where all the actors have an incentive in participating and cooperating with each other. So I don't think we should really treat commercial banks or banks of any kind as just givers, and the fintech should be takers in this equation. I think there has to be a win-win, but at a fundamental level, I fully support open banking.
Well, thank you indeed, Mr. Akhil, as do all of us. And I think I would definitely want to hear, Mr. Gondal, your view. You guys have recently launched, and particularly on the fintech side, what more would you want on the open banking side? The kind of data that you're looking at, and you've seen in different parts of the world as well. What do you think we need in Pakistan? What are the missing pieces?
So open banking, wherever it happens, it always has to be a win-win situation. Just doubling down on point made by Akhil, right? And banks can't be the only givers, right? So the give and take has to happen on both ends, fintechs and on the banking side as well, right? What we have seen happen through open banking in other parts of the world, and we hope that we would say one day, hopefully soon in Pakistan as well, with open banking, is layers being built on top of that, that service that is being offered by open banking, and that innovation happening, right? So it's an innovation enabler, mostly for fintechs, right? But again, the winners at the same time, banks are also have incentive to be part of that equation, right? And you can't exclude that. Banks are the backbone of any financial ecosystem, and banks will remain relevant. And this is how I always look at banks, is as partners, right? So as partners, as enablers, and most of the time we are not even walking in their line of let's say line of operations. What fintechs and are doing is or what segments we are catering are very different to what the banks, especially in case of Pakistan, what banks are catering to, or their type or their top lines, right? And coming back towards the experience, and I would go a bit away from open banking here, is the enabling infrastructure, right? So in Pakistan, that essentially is at the moment one link, right? Which is also, from my knowledge, is consortium of banks, or owned by consortium of banks, right? I mean, more innovation on it still seems to be a legacy, let's say, technology, and more innovation can happen in those areas. And I hope once the RAST is launched, a lot of that would be addressed in terms of interoperability, and also what Nadeem Sansab mentioned, the cost. So at the and Badwa Sab also rightly mentioned, the cost has to go down to zero, right? The cost should be, the cost of digital transactions has to be near zero, and it should be more convenient than cash for the mass adoption to happen. And the only way that happens is through a divine intervention like RAST, or regulatory intervention like RAST, that would basically reduce the cost for transactions, especially for micro transactions. And that is the kind of enabling environment that has acted as a catalyst. I'm here mentioning UPI as a catalyst in our neighboring country, as a catalyst for digital adoption, right? And the digital transactions, if you look at the example of our neighboring country, it was like around 16% back in 2016, and then it shoot up to 75% within 4 or 5 years. And the main enabler there was UPI and some other policy changes that, coupled with innovation and innovation happening on fintech side and also the banking side of things, drove that number so high. So we hope RAST could be that enabler to start with. Open banking, to be honest, since we have so many different systems operating, even with the one link, we are still communicating on some of the banks are communicating on still ISO rather than API. So it's going to take some time to get there. Let's put it this way. But once we get there, the adoption, I hope, would be a lot quicker.
Right.
Thank you.
Right. Thank you. Well, I think we'll now I'll take the discussion to the next part of the agenda today, and we have some questions in the chat as well, particularly with regard to this section, and that's about interoperability and the adoption of QR-based payments. Now, after MasterCard launched QR codes in Pakistan back in 2015, various players have tried cracking the QR payment space, but unfortunately, adoption has remained painfully low by customers as well as merchants. The State Bank has recently announced the introduction of a unified QR code that will allow payments by users from any digital application, eliminating the need to have separate apps. And this is expected to enable merchants, to enhance usability and drive digital payments at a low cost. I'd like to come back to you, Mr. Akhil, and this is a question in the chat as well. Now, we understand QR it's failed to have a payments revolution in Pakistan. Like in other countries like China, India, and even Brazil. What do you feel, has lacked here? And, particular question with regard to the pricing and the MDRs and how dynamic QR codes can actually play a role. Do you think that at all has a big implication? And will the new initiative of the State Bank in terms of the unified QR code resolve this challenge?
Noreen, I think we need to address the fundamental issues before QR payments can scale. As I outlined earlier, that there is a massive reluctance on part of the merchants because of the fear of documentation. So we will have to create a disincentive, and which is, I think, is a policy intervention is required there, so that they don't have this option of continue to declining digital payments. That's one part. The other one is that, frankly, we don't have critical mass in the market yet. We are still at below 10 million smartphone users using wallets. I think this number needs to increase. And in order for this number to increase, we need to address some onboarding they're not necessarily challenges, but we need to remove some more friction for an entry-level account, in my opinion, so that we can increase this number exponentially. There are some operational issues also with Nadra, etc., that we talked about. Of course, all of those would help as well, but I think that's one part. And then I think we need to worry about, as a third step, where interoperability comes into play and MDR, etc. In theory, I think we should move towards, like Vajra also said, and Talal as well, towards near zero pricing on digital payments. The traditional 2% type of MDR is not going to work that we are accustomed to in the card industry. And then lastly, I think the interoperability at a conceptual level, no qualms about it, no question about it, right? But I think we need to very carefully think this through, that what happens to the incentives and disincentives for the acquirers that exist today, right? Because sometimes in these things conceptually make complete sense, but in practice, there are, in an ecosystem, there are many players involved. So I think that really needs to be carefully looked at before we say there will be only one QR and everything else will be abolished. And because then all the acquirers would say, why should we lay down the rails on which everybody else can come on top of it? So then everybody will sit back and wait for each other to go and do the acquiring. So I think that's very critical. So we need to think this through, but conceptually completely agree that there should be interoperability. We should move towards near zero MDR. But before that, there are some foundational issues that I highlighted that need to be addressed, in my opinion.
No, noted, absolutely. And I think we have questions on this particular topic with regard to, how utility, companies, the large bases and all types of customer pricing needs to be reduced, for customers to adopt it. Also, in terms of, basic smartphones having the ability to transact with, digital transactions. The same question to you, Mr. Bajwa, Al-Falah has been working on this. What do you feel has to be done here in addition to the steps Mr. Akil has mentioned?
I think Mudassir has laid out a good plan. I think the good points that he's raised. Clearly, QR is, it has friction today, but it's also the cheapest to deploy in terms of aiding transactions. So it's something that we need to encourage. So one of the points that I think Seema had made earlier, better than cash. How do you get to be better than cash? You've got to get something that's really cheap to deploy and cheap to run. So clearly, QR is something that's very cheap to deploy. There are no POS machines of that sort. But unfortunately, it's still got loops that the customers have to run through before they can conduct the transaction. Plus, there's a cost, which is the MDR. So I think we've got to work on both those fronts to make it simpler, easier, and cheaper. And I think we've talked about that enough, but we have seen that if we do that, if we make it cheaper and simpler for customers and for merchants, that there is a direct correlation between adoption and reduction of these friction points. I think as far as this uniform standard QR approach is concerned, it's very welcome. I think it's the right approach to take. We are already probably one of the only banks that actually are doing that with our with the schemes with Visa and MasterCard. I think the easier it becomes for people on the issuing side and the accepting side to have common QR codes that it becomes simpler for the whole process. So we would really support that, and I'm glad that the State Bank has gone down that path. So it seems like a no-brainer that if you reduce these friction points and if you support a unified QR, eventually you're going to have a far greater adoption. That accompanied by some incentives by the government on the tax side will allow the resistance to documentation to go down significantly. And I think also, as has been mentioned, that perhaps merchants should be forced to do this. I think that's also something to be considered. I have mentioned this in a few places that I think we should be taking on the mantra of war on cash. And under that big umbrella, we should do all these things to ensure that cash dies eventually, or at least it reduces significantly. So we should just be talking about war on cash. And that war on cash has to come, as a mantra from the government and the State Bank of Pakistan. And we'll all participate very willingly and forcefully.
Absolutely, war on cash. I think it's a part of the Better Than Cash Alliance. I think without further ado, I'd like to open the floor to Mr. Suhail Jawad Saab, who's been sitting very patiently listening to all of our views here. I think, I hope, sir, these discussions right now were more food for thought for you, not that you were not already thinking about it. And so, I understand you have a presentation that you'll be making and covering these challenges, but I'd still like to pose these questions that you could answer, in your session here. Is, just comment on some of the recommendations made by the panel here and the impact of the regulatory interventions so far that you've already made. Also, it would be very helpful to learn of the role of the authorities such as NADRA, PT and FBR. How are they working towards a cohesive framework with the SPP to drive this agenda? So over to you, sir.
Thank you, Noreen. How much time do I have for the presentation?
So you can take about 10 minutes would be perfect, and I'll just hand over the floor to Mr. Nadeem Hussain to close this discussion then.
Thank you so much. Thank you, Nadeem Saab, Assalamu alaikum, Wajwa Saab, Mudassir Akhil Saab, Talal Gunil Saab, and everyone. Assalamu alaikum. I think a lot have been said today about the electronic payment acceptance. So I'll just try to club this into this one big bucket or terminology, which we call electronic payment acceptance. And I'll just start sharing my presentation. I'll try to quickly go through the presentation because a lot of things have already been said, and I don't think it would be a good idea for me to discuss everything here. But I've taken some notes, and I'll try to quickly, answer those questions. So let's start with the historical perspective. And what is the electronic payment acceptance or digital payment acceptance in Pakistan? What was it like? So primarily it was dominated by cards and credit cards in Pakistan. And acceptance has traditionally been a loss-making industry in Pakistan. Acquiring has been making losses, and that's because of the banks, too much attraction to the card issuers like Visa and MasterCard. They have their own MDR and interchange schemes, which is highly tilted in favor of issuance. And as a result, our industry, as far as the cards are concerned, they have become an issuance industry. And acquirers were making losses, I think since last year in January, when we intervened and we changed the composition of the interchange and the MDR. Before that, it was making losses, but after that, we have been seeing some good activity in that area. And unfortunately, the new fintechs or EMIs, they are also too much. Everybody wants to issue Visa and MasterCards, and that is one problem. I think I saw a question on the question question answer section here as well, that the state bank should do something to bring down the MDR and the interchange. But the thing is that these international schemes are not regulated by state bank. They have their own terms. And unfortunately, the terms that they offer to issuers are much more attractive in the shorter run. And the issuers, which are the banks or anybody else who wants to issue cards, they don't realize that they end up making paying a lot of money to these schemes in the long run. The second aspect of these schemes is that the cards are usually issued to people with certain income levels, certain credit history. So as a result, the cards, I think the cards have become a source of financial exclusion for most of the populations in Pakistan. And traditionally, there was a lack of presence of non-banks in the electronic acceptance space. I think that was primarily due to regulatory dysfunction. So I'll take some of the blame as far as State Bank is concerned. Even when we issued branchless banking regulations, it had to be a bank-led model. So it was mostly the payment space was supposed to be the domain of banks, and non-banks were not there. So since 2008, a lot of things have changed. We've got our own payments act in Pakistan. We've got a real-time gross settlement system. We've got branchless banks operating with a large number of agents who really serve the people on the main street or down there on the roads. And then we've got rules for PSOs and PSPs. So that's when we, in our 2014, we opened the doors for non-banking entities to come and offer gateway services. We also have got non-banking acquiring now happening, and I think it's gaining traction in Pakistan. EMIs regulations are there, and we've got a number of new EMIs in different stages of their, of launching their businesses. In 2019, we launched the regulations for digital onboarding of merchants. So it was for banks and for EMIs. And I know I talked to a number of regulators and international professionals on that. They really appreciate state banks this step. They very few regulators actually thought about having the facility or enabling the remote KYC and onboarding of merchants. And but unfortunately, I think since then a lot of activity is happening in this space, but we still have to go a long way. And then we are working on QR codes. I talked about how we changed the MDR and interchange share last year, and then remote onboarding like Russian digital accounts, and of course RAS. So these are some of the things that we were working on. And of course, there is the National Payment System Strategy, which actually gives a roadmap for and identifies areas in which the regulator has to intervene. So for example, we need to work on payment infrastructure, we need to work on enabling regulatory frameworks, and we need to strengthen our oversight function and all that. So I'll just skip this slide. I'll skip the status of EMIs and PSOs and PSPs. One important aspect that we have talked about, the Deputy Governor also talked about it, and it's the trust and security in digital payments. I think that's the first aspect. The industry needs to work on improving customer trust on the digital payments themselves. And it's not just cybersecurity, not just social engineering, it's overall customer experience. And we have issued a lot of regulations in that. And I think a number of these regulations have been instrumental in improving the customer trust on digital payments, but still a lot of work needs to be done. As a result of these, of course, good numbers, we are increasing every year, but I always, it's not like I am a negative person, but I always look at the size of Pakistan. We are the fifth largest country. We have got so much potential in our country. We've got about more than 130, 140 million adults who should be able to use digital banking. And when we compare these numbers with those numbers, it's I think we have a long way to go. So I'll skip on to this slide, which I thought I'll discuss today. And what are the lessons that we have learned during the past few years? And I think the first is, and we've talked about the cash and the war on cash. I really like Latif Saab's phrase, the war on cash. So that's true. But see what we are asking the customers. And I say this to my colleagues in State Bank. When we talk of financial inclusion, what are we actually talking about? On one hand, there is a customer who earns 30,000, 40,000, 50,000 rupees. His clothes are not even, when he will wear those clothes and go into a bank branch, nobody will even let him, come into the branch. And we are asking that customer that if he wants to be able to use digital payments, that customer should open an account or a wallet, conduct the due diligence. And for due diligence, we are saying that if you have just NADRA biometric done, you will only get a limited amount of wallet size. Otherwise, if you want to increase the wallet size, you have to go and give more documentation. And then if that customer has to use digital payments, that customer has to be very tech savvy. I mean, even people like us, many of us sitting here, when we have to use our apps and other digital payment services, I think we need to know the systems very well. We have to remember those IBANs and account numbers and all that. And we are totally on the mercy of the service provider. If I send money to someone else and that money gets lost, the service providers, whether they are banks or anybody else, they don't really handhold really well for me. And on the other hand, I've got cash. I've got 30,000 rupees in my pocket and I can just go to any merchant. It's ubiquitous, it's easy, it's zero cost. It doesn't cost anything to use cash. There is no taxman, there is no documentation. So Adif Sahab, the war on cash is, while I like the term, it's going to be a huge war. I think it's going to be the war similar to the Carthaginian or the Babylonian wars. There's huge wars spanning over decades, but that's going to be a big thing. And for that, I think all of us have to change our mindset. We need to think in terms of the mainstream. Of course, technology will play a very important role. New tech players can play a very important role. And we have seen the emergence of EMIs and all that. But I have to say that as a regulator, I still have to see innovation in this area. The only innovation that is happening is from the likes of banks and like EasyPaisa and our branchless banks, a little bit of that. EMIs and other fintechs still have to prove that they can create use cases for the ordinary customers of Pakistan. They have to think beyond just issuing a wallet and waiting for the wallets to work wonders for them. And I think the pricing aspect is very important. I've seen a number of questions on the chat box here, and I've also listened to what was said about pricing. Pricing is very important. While we all like to talk about zero pricing at end user, I don't know how practical that is. I am not even sure to what extent the fintechs will be able to solve that question. Because if we have entities who are just working on fee structure, they won't be able to make any money with zero or near to zero pricing. So we have to be very clear on that. Banks can make money because they have the float income with them. They have the accounts with them. They can do that, but not everyone can do that. And I think that's a really big question mark. Even with RAS, I know that we will not be charging anything on RAS, but what about the end service provider who is providing services to the customer? They have their costs, they have their investments in the infrastructure. So how will they be earning that money? And I think that's where we have to maybe learn some lessons from the way the schemes operate, because they work on an international basis and they've got access to big funds. The smaller amounts of per transaction MDRs get pooled into a big fund, and the fund is then used to, more digital payments for them. Maybe some sort of similar scheme for this year. And this problem will remain with QR also. The QR, while we are saying that issuers should be able to, Madrasa, we are saying that issuers should be able to issue their own QRs. That's the whole idea. But the app of the acquirer should be able to issue their own QRs to the merchant. But the app of the issuer should be able to read every QR. Now that's the whole proposition. When a customer with any app goes to a store, they should not be refused service because they don't have the app of EasyPaisa or Alfala or anyone else. That's the whole idea. And I think it should be, what we are trying to bring is something similar to the card market. Regardless of who issued the cards, if you go to a merchant, the card gets accepted by the acquirer. So that's the whole idea. And of course, there is the pricing issue, and we're working on that as well. We need to find solution to that as well. I think we need to work on online and instant fund transfers. That's very important. We need to move away from cards. And that's one of the lessons that I learned from a lot of other regulators. They told me that if you want digitization to be promoted, you need to move away from the card method. And I don't fully agree with that, cards are there, cards will remain there, but I think for a country of the size of Pakistan, we need to work on instant and online fund transfers. Of course, I think regulators need to change this. We need to change. We need to think about regulation light. We need to think about light regulation. I fully understand when Talal said about having, increasing the size of the wallets, and I think that's a big challenge. We also need to do something about other regulatory requirements, and very soon you will see that we will have our framework for remote onboarding of customers and all that happening. So that is the direction in which we are moving. But light regulation needs to be supplemented with smart oversight by regulators. For that, we should be ready to use RegTech, SubTech. Our compliance should be ready to use entity should be able to use RegTech, and we should be able to immediately identify, detect cybersecurity issues, frauds, preventions, and take immediate corrective actions. The customer should not be made to suffer because the service provider was weak. The customer should not be made to suffer because the service provider is not paying attention. So I think that's where we need to improve and enhance our oversight function. And on the other hand, we also need to think light regulations. And when I talk about collaboration and sharing, the two things comes to my mind. One is, of course, the interoperability, which is the technical interoperability, and the other is the scheme interoperability. How can we share our resources? So like we all blame banks and we say that banks are not doing this, not doing that, but banks are in the business of making money. They are making money. And if the fintechs want to collaborate with banks, they need to come with very good value proposition for the banks. And similarly, the banks have to be ready to share their customer data and customer base and other services with the fintechs if there is a value proposition for the customer. So that I think collaboration and sharing is very important. I think the most important thing is customer experience. And I've seen that unfortunately, what I've seen is that there are apps out there, there are portals out there, but unfortunately, in Pakistan, I think assisted services is the way to start. So we have seen how Easy Paisa and our overall branchless banking, why was it successful? Because we were able to deploy those dukandars and enable them to go out and service customers, whatever services they were offering. And that was where hand-holding was done. So while issuing of apps and digital and all that is very good, I think it needs to be supplemented. Customers' hands need to be, we need to hold their hands. The apps and other, whatever USSD based menus we have, it has to be really, 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 customer friendly. So I'll, in the interest of time, I'll skip all these slides. I wanted to talk about RAST, and I already shared about what I meant by QR. So this is just what we think the interoperable QR should look like. So regardless of which acquirer issues the QR to their merchants, the app should be able to read each and every QR and then direct the payment to the concerned gateway or the processing issuer. So that's the whole idea. So acquirers would still be there and they would still be able to offer their services and their, whatever discounts or whatever they want to do, they can do that. We have already issued the first framework of the standard QR, and hopefully we are looking forward to issuing the QR standard by the end of September. A lot of Atif Saab has very elegantly talked about open banking, so I will not repeat what open banking is, but there are certain concerns that as a regulator we need to think about. So one is, of course, how the data and other services would be shared, and we think it should be through APIs, and API should be standard. Their specification should be standard. Second is operational guidelines. So we need to be very clear about what will happen in what, because on one end, while we'll have the banks, on other we'll have mostly the TPPs, the third-party providers who are not regulated. So how do we handle with them? How do we handle them? What security standards do we have? And I think that becomes very important in the light of recent cybersecurity events around the world, and Pakistan as well. So what type of security standards are there? And user experience, including customer protection, including how do we protect customers, how do we determine liability, and what fallbacks do we have for customers. So I think these are very important. Some of the areas in which we are thinking and we are working and we are devising our own framework is what type of data would be shared, what type of services would be shared, which type of participation would be mandatory or voluntary, and how will the whole governance thing works? How will the standards be set? How will the pricing be set? and of course, cost and data privacy, portability, and all that is very important. So this is something that we have been working on. So what is the future direction? This is going to be my last slide today. So this is, of course, open banking. I think it's something that we need to work on. We'll move very slowly, but nevertheless, we'll continue to work on this because we need to leverage on the roles of fintechs, and we need to leverage on the roles of the new technology, especially the API technology that we have, and we need to move towards that. The second is online transfers. I think State Bank will be moving forward and will be supporting online transfers. Now, of course, card transactions could be there, cards would be there. We are working with card providers and schemes in parallel, but online is very important to enable use cases like e-commerce. We have difficulties when we deal with international payment schemes. Somebody posted a question here on the interchange and MDR on QR, and somebody said that the MDR needs to be brought down for QR-based transactions. And we have been talking to schemes on that. And one of the major issues which we have with the schemes on QR is that we want the QR to be really low, the interchange to be, and the MDR to be really low on QR-based payments, while these schemes have other thoughts on that. So we need to work on online payments as well. Of course, non-banks will continue to play their role, and we will work with them to enhance their security and liability arrangements. And we'll, of course, work on enhancing sites. And of course, we'll continue to focus on government and private sector. Regarding your question, Noreen, about the role of NADRA and PTA, you know that State Bank holds regular meetings with all the stakeholders in the digital space. Atif Saab and others have been attending those meetings as well. And those are attended by NADRA and PTA and FBR also. So we are trying to resolve those issues. Of course, all these organizations have their own issues. They have their own limits and problems, but we are making progress there. So for example, with NADRA, they have agreed to provide remote app-based biometric facility to the industry. We'll be starting work with 5 banks who have been granted permission to conduct pilot, and we'll be moving forward with that. I think that's a major step, major progress that we've made. Similarly, we are working with PTA also, and we are working with FBR, and I think that's very important to mention that we are working with FBR, Atif Saab, to gain concessions on taxations and other issues. So it will take time, but I'm pretty much hopeful that we'll make progress. Thank you so much.
Thank you indeed, sir. That is very, very promising and great to hear. Some really great incentives that the State Bank has already brought forth. And I think you've already answered one of the questions that someone in the audience has asked with regard to app-based biometric. And so another question, steering towards it would also be towards centralized KYC. Is this something that is being worked on by the State Bank and other players, other authorities?
Yeah, so we are working with the Pakistan Banks Association on this. It's not centralized KYC, it's sharing of KYC. So every bank or institution may have their own piece of KYC for a customer with them. And we're working on how we can actually work with all these banks together so that the customer doesn't have to conduct KYC again. One example is Roshan is one example, Roshan Digital Account, where a customer, if he wants to open an account with any of the brokers for stock exchange investment, they can actually get KYC from the banks. Banks can share it with them. So we've enabled them. So we are making progress in that, and we are working with Pakistan Banks.
Lovely. This would be very powerful, even for the challenges of onboarding, both for merchants and individuals. We hope this would address those challenges. Well, I'd like to, express my gratitude to all you esteemed panelists. It has been a very, very productive discussion today, and we hope to transform the takeaways from today into a white paper. The Pakistan Fintech Network will be sharing these details with you and hosting other follow-on sessions with key industry players. A big thank you to the Pakistan Fintech Network for organizing this today. This is the start of many more fruitful discussions to follow. With that, I'd like to hand over to Mr. Nadeem Hussain to close the session for today.
Thank you, Noreen, and thank you for a very well moderated session. And thank you to all the participants for very productive and thought-provoking ideas. I'd just like to sum up in a couple of minutes some of the thoughts that were expressed. On the merchant onboarding, I think the key theme for me that came away was that how many customers exist who can actually use a digital payment at the merchant. So, I mean, the point that Mudassir had made, that 10 million wallets are on smartphones, the rest are on feature phones. So if you have QR code, how will a feature phone person actually use it? Be limited to the merchant. The point that Sohail made is very well accepted, that the one QR code, I think, is a great idea, because you're talking about the accepting bank having a app that accepts the QR code that exists at the merchant. But the point that was earlier made by several participants, that is, these are, in my view, small roadblocks. The major roadblock is the reluctance of the merchant to get documented. And with the previous FBR, we had a session, and actually in the State Bank, and he had agreed in the State Bank that he would consider a tax holiday for the low-level merchants to actually encourage them to start using digital payments and not worry about the tax implication. Unfortunately, Mr. Shabarzadi left, and that particular thread has not been picked up. This is something that neighboring countries have done to enable small Kiryana stores to actually accept this fear of documentation. There was a 3-year tax holiday for digital payments for acceptance at these merchants. And I think something like that needed. Talal mentioned a phenomenal increase in the cash to digital transactions in India, but I would caution that bulk of that increase came because of the change in currency, where they had no choice but to go to digital payments, and the base level increased significantly. And after that, even when cash got introduced, many people, including the rickshaw driver and the rediwala, had become used to digital acceptance. And as a consequence, there was a major change. I'm not suggesting we let go of the rupees 5,000 note, because that would be a major disruption. There was huge GDP and economic growth consequences in India. But the benefit obviously was that a major change in this war on cash was achieved when the 5,000 rupee and the denomination, changed. The zero MDR for me poses a problem for the simple reason you have acquirers and issuers. So if you have zero MDR, unless the acquirer is making enough money, how will you pay the issuer? Because the issuer expects to be paid when their customers will come and use a payment using the QR code of an acquirer. So there has to be a balance between either the acquirer is doing lending or has other value-added services and is capable of paying a 0.5% interchange to the issuer, other the issuer will have no incentive for their customers going to the use of using QR codes. And as I said, QR codes, as mentioned by by Atif, is far cheaper than installing POS machines. Using soft POS converts existing phones into POS, converts non-presence cards on e-commerce into presence cards just by using NFC-enabled cards. And NFC-labeled cards between debit and credit cards are close to 10 million in Pakistan. On the merchant onboarding, I would totally subscribe that we need to reduce the friction, and some of the points raised and recommendations done, including Mudassir. How do we decrease the friction? And something I think I'm so sure Sohail has taken into account, that if you already have varices done, why do you need the front end or back end? Can't we convert that into video-based KYC or a facial recognition KYC or a voice recognition, so that electronic means single, once you've taken the varices, if you do want something, the taking on a front and back is convoluted, it increases the customer journey. And if our single lens is the customer journey, then surely we can think of other KYC related automated things which don't have this major fallout of 80% to 10% from app loaded to customers converted. On the interoperability side, I must say I disagree, and I respect everybody's opinion. It's something that both Sohail and participants know. I think open banking is something. This is a railroad like RAST, and the State Bank mandated RAST, and the State Bank mandated limits for banks to do mortgage lending because in the greater good of the customer. In my view, this is not for the greater good of the fintechs, it's for the greater good of the customer. We have less than 10 million borrowing customers in Pakistan. The entire banking industry, entire commercial banking industry lends to less than 1 million active customers. So if this can lead to 10 to 15 million customers, notwithstanding the point that Sohail Jawad has raised about customer security, about data security, there has to be a better way and a faster way of doing this. We've seen in countries, private sector coming up with solutions like Plaid, like Brick, which actually have not waited necessarily for the regulated transaction, regulated framework like PS2 or GDPR to come across and have been phenomenally successful. It's just food for thought. I don't think in open banking, very honestly, we're going to be able to please every player. And if we look for that, we'll be looking at another 3 years before we can get to something which will become operational. I'd again like to take this opportunity to thank Sohail Jawad especially for taking the additional time and sharing with us the framework that the State Bank has, to both Mudassir and Atif, who have very busy schedules, and obviously Talal, from the fintech side. Thank you, Fahad, for organizing this, and thank you, Noreen, for outstanding moderation. Thank you, everyone. And as Noreen mentioned, this is the first of many seminars that the Pakistan Fintech Network intends to do, to bring out industry issues and to the forefront. Thank you very much, and thank you, everybody.
Thank you so much, everyone.
Thank you.
Thank you.
Thank you. Great job. Thank you.